Welcome to this video. We're going to try and give you some insight into the potential impacts of both the halving of Bitcoin and the absorption of Bitcoin by the ETFs at their current rate, which is building up. And in 2023 November, Glassnode conducted at that time with a historic Bitcoin price of approximately $38,000 an analysis of what this was likely to have in terms of the impact on Bitcoin prices. Now, at current rates, we've got approximately 900 Bitcoin being issued per 24 hours. It varies very slightly depending on the length of blocks, but it's pretty static and stable at around those levels. Come the halving in April, with this issuance rate's going to reduce by 50%, which is potentially going to significantly impact both the available supply for miners to sell and make available back into the open market. Now, Glassnode also undertook to look at what percentage of Bitcoin that's been issued historically is currently available to participate in market activity. So let's move and have a look at those figures next. Now, accurately assessing the available supply to participate in a market is incredibly difficult to do. Of the over 19 million Bitcoin currently issued, a lot of those are actually not available for daily market transactions. It's equivalent to around 76% is in long-term storage. Glassnode tried to assess what percentage were currently available for market participation, and they came to the conclusion that this was approximately 2.33 million Bitcoin. That equates to between 5 and 10% of the circulating supply on a day-to-day trading basis. This graph was used to demonstrate the reduction in exchange balances of Bitcoin that had occurred during the current Bitcoin cycle. You can see on the right-hand column the exchange balances. This element here had dropped to 2.3 million Bitcoin at the time of this report. Remember, November 2023. Now, since then, we've had the emergence of ETFs successfully soaking up an enormous number of Bitcoin. And this is the latest data on that with BlackRock IBT now surpassing 10 billion in assets under management. That equates to, if you combine all the ETFs, almost 750,000 Bitcoin that have so far been absorbed into these ETFs and should effectively be in cold wallet storage, effectively not able to participate in markets. So why hasn't this affected the available supply on exchanges to the extent you would have expected it to do so? Well, there are some other things going on in the market. Legacy, basically, from 2021, 2022 and 2023, and this is one of them. Genesis getting permission to sell up to 1.3 billion worth of GBTC that's been frozen effectively. And there are some other big blocks of Bitcoin effectively that are coming back to the open market over the coming months. And I believe this is in part why we've not seen a supply crunch occurring very rapidly despite the inflows overall into the ETFs. Now, this could potentially also have some effects on the available exchange volumes of Bitcoin, particularly if the repayments and sale by the US federal agencies continues or becomes extensive. There's a significant number of recovered Bitcoin that could potentially become more fluid and re-enter markets during 2024, having, as this article from CoinDesk suggests, have an impact on Bitcoin's price.